Bismillahirrahmanirrahim. Assalamualaikum everyone and welcome to Ethis webinar. And the topic for today will be Islamic Microfinance. And joining us today, the presentation will be by Professor Muhammad Ubaidullah. And we are at Ethis office in Petaling Jaya at the moment. And without much ado, let's some small introduction. Okay, Mr. Muhammad Ubaidullah has come all the way to us, joining us from ISDB. He's a professor in economics with quite a vast experience in the field. He's a certified trainer of trainers in microfinance by the Asian Development Bank Institute and certified in digital money by the Fletcher School of Law and Diplomacy and also the Digital Frontiers Institute. He has a PhD and also an MBA degree. Okay. I think we can go in straight away, and I'm Fadli with Ethis crowd, and let's have the session started, please.
Thank you, Brother Fadli. Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good afternoon to all of you.
Okay.
Okay.
All right. Sound okay?
Thank you. So today in this, I intend to make a very brief presentation on Islamic microfinance and specifically focusing on 3 points. First is how does Islamic microfinance work, where I'll be basically talking about the commonly found models and modes of Islamic microfinance, just to give you a brief overview of what the Islamic microfinance scene has been these years. And now we are talking about 2 to 3 decades of history of Islamic microfinance. And then, of course, we'll look at, in the light of these experiences, what have been the challenges, the key challenges that Islamic microfinance institutions have been facing, or what the sector has been facing as a whole. And from that, we naturally, that's logical to move on to how the challenges are going to be met and what lies in future for the Islamic microfinance sector. So to start with, how does Islamic microfinance work? And here I think the key point is to see how it is different from the conventional microfinance. Conventional microfinance, as we know, has a longer history perhaps than Islamic microfinance in its contemporary form. Of course, Islamic microfinance has always been there. Poverty alleviation has always been the objective of traditional classical Islamic institutions based on zakat, based on awqaf, and such other Islamic institutions. For the Hasana, for example, these have always been there, but they have been there not in their contemporary form, but they're in a more kind of classical form. We have been witnessing that. So, but what we are going to discuss here is to focus on Islamic microfinance sector as we find in its contemporary shape, because a lot has been done, experimented with, and a lot of good lessons have been learned. A lot of good practices have been documented. So based on that, certain models of Islamic microfinance have naturally evolved. Some of these have been replications of the conventional ones, because again, in the conventional sphere as well, it is a goal for all policymakers across the globe to alleviate poverty. Indeed, poverty alleviation is the greatest moral challenge of this century. And currently we find it manifesting in the form of the first SDG goal, the Sustainable Development Goals, as we know. This is an agenda for the next 15 years at least, for all countries taken together, coming from the United Nations as a mandate. So poverty alleviation is, of course, going to be a key policy goal. And with that aim, we are going to see continuous experimentation, continuous policy changes, policy formulation, and experiment with new and new models. So Islamic microfinance and conventional microfinance, though some would like to see them as no longer very fashionable to talk about them, but the fact remains is as long as poverty is there, there will be search for solutions on how to meet this challenge. Now coming to Islamic microfinance, again in its traditional and also in its more contemporary form, we can, of course this is not a very exhaustive list before you, but we can very briefly, based on the sharp points of difference from the conventional microfinance, we can identify how Islamic microfinance is different. The first point of difference, I would say. It's a difference of emphasis. It's not that conventional microfinance doesn't look at charity as a way out or charity as a way to fund many of its activities. Indeed, the early conventional microfinance did receive its financing or did receive it owes its existence to charity funds. And the initial experimentation in conventional microfinance starting in the 1970s, they were basically using charity funds. So charity is there essentially as a very critical pillar of microfinance or any poverty alleviation experimentation. But what makes it different in the context of Islamic microfinance is that in Islamic microfinance, we have specific forms of charity which go with specific ways and norms which could be somewhat alien to conventional policymakers. For example, we have the institution of zakat, which basically is different from charity as we understand, or philanthropy as we understand, in the sense that this is a recurring flow, unlike the conventional charity, which is, or conventional donations, which could be erratic. And that is one of the reasons, because of the randomness in the flow of charity funds or the donations, they have not been seen as a sustainable source of funding by conventional microfinance sector. That is a key, I would say, obstacle, or the key reason why conventional microfinance practitioners have not looked at charity as a sustainable way of funding their activities. That is why the good practices I've always talked about using charity only for capacity building and not for any other purpose like absorption of certain cost elements. And that's where Islamic microfinance differs from conventional microfinance, where the institution of charity, like zakat, for example, is an annual recurring inflow, and that could be fairly predicted with reasonable accuracy year after year. And if we look at the empirical data, we also find across the globe, zakat funds have been growing, and the growth rate has kept pace with certain variables, certain policy changes. Therefore, they have been quite predictable in that sense. And that is where the departure is. Similarly, we talk about waqf or Islamic endowments, which are by definition sources of recurring flows of benefits. These benefits could take the shape of cash flows, or the benefits could be expressed as cash flows, but there are benefits which are continuous, which are going to be, I would not use the word perpetual, but fairly long-term in nature, because we are also talking about temporary awqaf, going by the contemporary fuqaha, the opinion of the contemporary fuqaha. But we are certainly looking at long-term sources of funds, which are, again, by definition, they become sustainable, which is where it differs from conventional charity-based microfinance, and which is rightly frowned upon because it is erratic. The flow of donation could be highly random and therefore unpredictable. The second point that Islamic microfinance very clearly focuses on, there have been large number of traditions of the Prophet, peace be upon him, and his companions, where the Prophet, peace be upon him, very clearly exhorted the companions to not to look for charity. He discouraged seeking of charity. He encouraged giving of charity. There's a big difference there. But he discouraged this seeking of charity, and he exhorted them to empower themselves economically. And there are very well-known hadiths or traditions, which you can, which is not difficult to find. In fact, and there are, if time permits, I'd revert back to this hadith, which basically encapsulates this basic norm that of economic empowerment, that we are going to create people who are empowered, who can look after themselves, and who are not dependent on charity. The third essential element of Islamic microfinance is that it must be simple. It must be based on simple contracts which are not unduly complex for either of the parties. So simplicity is always a virtue within the domain of Islamic microfinance. Just because we have a range of Islamic contracts which could be potentially used for microfinance, it doesn't imply that we will make composite structures which are not easily understandable to the clients, and thereby we can take advantage of their ignorance and perhaps take them for a ride. That's something that is extremely discouraged within the Islamic microfinance framework. Simplicity is virtue, so is transparency, so is accountability. Accountability is firmly rooted in various traditions of the Prophet, peace be upon him. And another key element that I would emphasize very strongly is creation of debt. Islam permits debt. Of course, it permits. There are contracts which are created out of, which are in essence debt-based contracts, which are created out of indebted, or which create indebtedness for the borrower, and lenders, they are encouraged to give beautiful loans or qarda hasana to whosoever is in need of any loan. So debt is certainly permissible, but creating mounds of debt is something that is discouraged within the Islamic microfinance. So an Islamic microfinance institution that way would be very different from its conventional counterpart, in the sense that it will not seek to encourage more and more, greater and greater amounts of loan. Rather, the approach would be how to make your client get out of the loan, the initial loan, as soon as possible. So debt avoidance is always a virtue. And again, there are traditions which of the Prophet, peace be upon him, very clear sayings which discourage people to continue in debt, or which encourage them to get out of debt as soon as possible. What goes along with debt avoidance, of course, is the freedom from riba. Riba is, we know, is a prohibited, very clearly prohibited, and the entire Islamic microfinance, or Islamic finance for that matter, the most important foundation is prohibition of riba. And it is riba, if you look at how the arithmetic of riba works, in simple terms, one can say that riba basically implies compounding of debt. From an initial debt, if you allow riba, this initial debt, let's say X amount of debt, can automatically grow into a much larger amount with time. So this grows with time, and that is the element of riba which is clearly prohibited within the Islamic finance framework in general, and microfinance in particular. So, of course, there is a natural plug on the amount of debt that can be created within the Islamic framework because of the prohibition of riba. But the fact remains that even if you prohibit riba, simultaneously you should also discourage loans and increasing the amount of loans or increasing indebtedness as a way of financing the micro enterprises. The freedom from gharar is again goes with simplicity. Actually, we are looking at eliminating all forms of uncertainty in the contracts. These two elements, freedom from riba and gharar, essentially relate to the contractual mechanisms that will be used for Islamic microfinance. So Islamic contracts that would be used for microfinance, that would be free from undue complexity, they would be free from uncertainty. And if you refer to a good text on Islamic finance, and there are plenty of texts actually available now on the internet itself, which explicate very clearly what is the meaning and application of prohibition of riba and the prohibition of gharar. But for Islamic microfinance in general, we can say that it means avoiding complexity, it means avoiding interest, it means avoiding, making it simple, making it transparent, making it accountable, avoiding debt. And finally, we have also a very important element in Islamic microfinance, which is cooperation and solidarity. There are mechanisms, there are contracts which are rooted in cooperation. For example, we have all the non-profit contracts that we'll see, they are rooted in cooperation, and the profit element is absent in such forms of contracting. These are essentially non-commercial contracts. So when you are making use of these contracts, for example, hawala. Hawala is a contract used for remittance. Hawala, or you have the contract of kafala. Kafala is a contract used for guarantee, or what we commonly understand as insurance. Now, when we give a guarantee, when you stand as a guarantee for somebody, you are not supposed to commercially benefit from it, or you're not supposed to make profit out of it. When you stand as a guarantee, when you remit funds, or when you transfer debt to a third party, you're not supposed to make profit out of it. So these are some of the contracts, and the entire takaful industry, or the mutual insurance industry, is basically rooted in this contract of kafala. It is mutual takaful, and it is rooted in cooperation and solidarity. That's why we say mutual insurance is permissible. Commercial insurance, there are different opinions about it. Some scholars say that it should not be based on profit element. Some do allow it as a way to bring in this important commercial contractual mechanism in place. And we have another element, family cohesiveness, as an important norm. As we have seen, conventional microfinance in its contemporary form has actually focused a lot on empowerment of women. And there is some evidence, sociological, by research undertaken by sociologists, that it might have resulted in some family-related discord. When you are trying to empower one part of the family, sometimes it is at the cost of the other part. And this actually, this idea is somewhat alien to the Islamic microfinance framework or the Islamic approach itself, which sees family as a single unit. So this is not to imply that women would be in any way, they occupy a secondary position to men. Actually, what we are looking at is a possibility of empowering both men and women as integral members of a family. That is why family cohesiveness, which is very, very important for the society as a whole to ensure peace in the society, we need family cohesiveness. That's why Islamic microfinance identifies family as the unit for empowerment or economic empowerment. And of course, finally, we have the freedom from riba and gharar, about which I've already spoken. Now let's briefly take a look at the modes of Islamic microfinance. Again, this is very familiar to anyone who is familiar with Islamic finance as such. We divide the various modes of Islamic finance or the contracts, the contractual mechanisms that Islamic finance provides. They all could be used in the context of Islamic microfinance as well. But there is an important difference that I would like to highlight here. Instead of going on to define each one of these, I guess most of our participants are quite familiar with these institutions and modes. So I'm not going to define them or offer a further explanation of each one of them, but some very broad observations that I would like to make here. First of all, the modes that will be used for Islamic microfinance, they do not actually require the kind of tampering that we have seen, that we have witnessed in the context of mainstream Islamic finance. In mainstream Islamic finance, for example, we have been talking about legal stratagems being employed. For example, tawarruq. For example, where you make composite financial structures which try to minimize the risk for the financiers. And this have been rightly frowned upon by the scholars. And many policymakers are not very comfortable with the idea of such stratagems. But the fact remains that some of these have been considered as necessary evils. And that is why they have been tolerated. In the context of Islamic microfinance, fortunately, we are thinking in terms of a rural economy or a microeconomy, which is very similar to the classical economy for which these modes were originally designed. For example, you have the output sharing model in agriculture. This is not meant for the industrialized or agriculture which uses heavy machinery or the kind of agriculture projects that we witness today. But these were basically designed for small farmers, smallholders, as we know, smallholder farming community. And they do the job best when used in that context. Similarly, we were talking about small markets, fragmented markets, and all these classical contracts, they perform the best in that context. Unfortunately, in Islamic microfinance, we are witnessing a similar situation. So we do not have a need to really modify or make major modifications or go after the legal tricks, legal stratagems to fit them kind of forcefully to the situation to perform. So most of these contracts in their original classical format can deliver. So we don't need any kind of tampering, and we can actually look at the classical contracts, refer to the classical texts, and use them as they were used in early times. So we have the for-profit modes, various participatory modes, output sharing as well as profit and revenue sharing. We have seen them, how they're used for agriculture, how they're used for micro trade, micro enterprises. We have micro istisna, could be used for micro manufacturers. We have micro salam, which could be used for the farmers, the farming community, for smallholder agriculturists. And basically all these contracts could be used. And we have also the fee-based modes where some of where the contemporary fuqaha basically allow the microfinance institution to recover its cost, avoiding the element of profit, because they're basically not for profit modes, but it can always recover the cost that it incurs in providing this kind of services. And then we have Islamic microfinance institutions which focus on one or two of these multiple or these various mechanisms that are available. Some focus entirely on zakat, some focus entirely on awqaf, some are entirely Qardi Hasana based institutions. They call themselves Qardul Hasana funds. Some are could be let's say purely risk sharing kind of mechanisms they use in the context of agriculture, in the context of financing orchards, and you have the micro trade and micro leasing mechanisms as well. The contract which actually stands out here is, which I would like to very briefly talk about, is istijrar. Istijrar is a contract that is specifically meant for repetitive transactions from a single seller, which is very, very useful, or I would say it resolves many of the issues that our contemporary Islamic microfinance institutions are facing when they try to use murabaha kind of mechanisms. If you see the number of clients that a typical microfinance institution deals with on a particular day, since we are now talking about transactions where the value is of small magnitude, we are looking at a very huge number of transactions of small value, and mostly from single vendor or a single seller. This istijrar contract can actually be used instead of murabaha, and which basically makes it more flexible, and where the settlement can be done at periodic intervals. If we do murabaha instead of istijrar, for example, we are obliged to settle every single murabaha transaction after it is done, and which becomes very, very cumbersome, very, very complex when a single, let's say, field officer is trying to do with 500 families on a single day, and there are 500 transactions, for example. Then you have to buy it from the buyer, 500 different buyers could be, and 500 different transactions, and then these are resold again to your clients. This could be extremely cumbersome to settle. That is why istijrar comes as a solution, which is basically meant for such situations. So the point I'm trying to drive at is that Islamic finance and Islamic microfinance, as such, there's a great diversity in the contractual mechanisms that are available. And we can use this diversity to our advantage. We don't have to restrict ourselves to murabaha and murabaha alone. We can look beyond murabaha. We can look at a range of contracts. In fact, the classical literature, if I exhort many of our contemporary researchers who are with me today to actually look for many more such contractual mechanisms that were used during the early stages of development of the markets, and they did serve the local communities very well. And today, if we kind of use or make an innovative use of such mechanisms in the present-day context, many of the present-day problems could be addressed by them. And then you have also the contracts of wakala, which could form the basis of mutual insurance or micro takaful, and also hawala, which could form the basis of remittance, micro remittance. So this in a nutshell is you have the overview of the various modes of Islamic microfinance. In their classical form, they could be used because we are now looking at rural markets and rural in the context of villages and in the context of microeconomies. Now, moving on from modes to models, again, I'll try to very briefly give you an overview of the various models that have been used during the last couple of decades. Broadly, we can look at three different types of models, I would say. Some models basically are replications of conventional ones. As I started out saying that the conventional microfinance in its contemporary form that precedes the Islamic microfinance as we see today, or in its contemporary form. Therefore, we have seen many models have come out of such initiatives starting from 1970s onwards. We have the joint liability group based model, or the well-known Grameen model based in Bangladesh. We have the BRAC model, which is Finance Plus, later on moving on to become a Finance Multiplied model, where you have non-financial services combined with financial services. You have the India-based self-help groups, which are basically larger groups, but again, which are linked to commercial banks and also linked to savings schemes. Then we have the village bank models tried out by many international multilateral development institutions. We have credit unions, we have ROSCAs, or rotational savings and credit associations. We have the very age-old classical pawning, which is basically collateral-based financing. Now, all these, and then we have the crowd funds, the latest addition to the list, which have also been used for micro-lending and microfinance. Now, all these conventional models of microfinance have also had their Islamic replications. There have been attempts to change the product from an interest-bearing one to an interest-free or a trade-based or a leasing-based product, which is acceptable within the Islamic framework, retaining the original model of doing business. Okay. So we have the Islamic replicator of the Grameen. For example, we have the Islamic Bank Bangladesh of its rural development scheme. Basically, it replicated the Grameen model, but it replaced the original interest-bearing Grameen loan for an Islamic loan, which is basically by margin or a deferred payment contract. Similarly, we have had Islamic counterparts or Islamic replications of most of these forms of conventional microfinance models. Different models, they became popular in different regions for a variety of reasons. Now, when these were replicated by Islamic microfinance institutions, they certainly provided certain advantages. So this is basically I see as positives with such replications. They were simple. For example, Grameen loan it works with just a single product, which is the Grameen loan. This is the mother product, a single simple interest-bearing product. Now, when you replace that with Biomargel, again, you have a very simple product to continue with, and your entire microfinance portfolio is basically, it includes this one single product. And with single product, we have simplicity, and you have greater transparency, of course. And again, you can learn from the mistakes of many of these initial experiments undertaken in the conventional world. So you have more standardized procedures and documentation you can benefit from, and you have high staff efficiency and professionalism. For example, many of the conventional microfinance practitioners, with the advent of Islamic microfinance, they changed their hats and became Islamic microfinance professionals. And many of the Islamic microfinance institutions actually benefited from such professionals. So essentially, you are looking at replication of best practices from conventional microfinance. Then we look at another type of models, which we can broadly say these are indigenous Islamic models. They come out of indigenous initiatives. I was really pleasantly surprised on my first visit to Indonesia, where I found most of the models of microfinance that were being used, they actually developed indigenously. And I had the privilege to meet some of the proponents of these, or the pioneers actually. And some of these models, if you look at closely at them, they actually came out of pioneering efforts by individuals in different parts of the globe. So we have Qard Hasana funds, which basically look at Qard Hasana as a single contract around which the entire fund is structured. So if you go to Iran, for example, you will find even much before the Islamic Revolution, these funds existed. These funds existed, and they suddenly got a fillip after post-revolution, and they became part of the mainstream microfinance or financing system. So at one point in time, there are more than 5,000 Qard Hasana funds in Iran. Baitul Mal wa Tamwils, the house of Mal, funds and financing, Tamwil translates as financing, or they're fondly called as BMTs. This is a product of Indonesian mines, and these scholars, they looked at composite institutions, which will also collect zakat and awqaf and all charity funds, sadaqat. So you have a Baitul Mal housed within that same organization, and you also have Baitul Tamwil, house of financing, where they basically look at the murabaha as the main contract, and also there are other contracts that are also being used for profit financing, for commercial financing. So these Baitul Mal wa Tamwils, again, they came to the limelight during the last financial crisis that Indonesia faced, that Southeast Asia faced. Much of the mainstream financial institutions collapsed, but the BMT survived. And that is what provided them the visibility, and they came to the limelight because of that, because they could withstand being localized in nature. They were kind of immune to the macro influences. And that is what gave them the edge as indigenous microfinance institutions. And in fact, they also, if you look at the numbers, similar to Qard Hasana funds, they serve small number of peoples, but they are in thousands. Literally, you have thousands of such institutions dotted across Indonesia. And they've also been replicated in other countries in Southeast Asia, like Philippines, for example. We saw replications of the Indonesian model. We saw replication in Maldives. We saw replications in India, the cooperatives, using the cooperative framework. Baitul Mal Tamwil are somewhat different from the cooperative structure, as we know. The cooperatives are basically similar to the secular credit unions. They have their own, let's say, for example, one member, one vote mechanism, which is very essential ingredient of a credit union or a secular cooperative. But in Baitul Mal wa Tamwil, we find there are variations to these principles as well. We have different layers of, I would say, community participation, which is where they try to build a kind of consensus around their decisions. And being small groups, such consensus development is that much easier to bring about. And we have, of course, purely zakat-based funds and awqaf-based institutions. Again, they have their own strengths. Unlike the conventional microfinance institutions, they stand apart. They are a class by themselves. So they no longer carry I will not use the word stigma, but a question mark of being replicators or mimicking the conventional system. So they stand apart. They don't carry the criticism. They don't have to confront it, that they are essentially mimicking somebody else's system, and therefore they may not work. That kind of apprehension or the kind of negative, I would say, feedback that often goes with the replicators of the conventional models. But here you are actually talking about institutions which are deeply rooted in the Islamic traditions. So, and you are going a step ahead. You are actually institutionalizing voluntarism. You're not just encouraging voluntarism, but you are actually creating an institutional framework and for voluntarism. And also, you are institutionalizing charity and good giving. Zakat giving is no longer an individual obligation. You have a collective mechanism in place where zakat is collected, mobilized, and zakat is allocated in the best possible manner, optimizing the resources. So therefore, institutionalization has its own strengths, own advantages, which basically this Islamic models, the indigenous ones, they bring about. Again, because of this, they're able to provide low or zero cost of finance. That's a real, I would say, a game changer in the sense that conventional microfinance have always faced this criticism that the cost of funding is exorbitant. The poor find it unaffordable, and affordability is something that is never considered by conventional microfinance institutions. And in fact, some of them, they deserve the criticism. For example, in South Americas, we have seen how conventional microfinance institutions have charged 3-digit interest rates for financing the poor. So when it comes to financing or providing a benefit to the poorest of the poor, we certainly feel that cost is a consideration. You cannot just wish it away that no, access alone is everything and cost simply doesn't matter. The fact of the matter is the cost does matter, and the microfinance product must be affordable to its clients. And it's another matter what kind of clients you want to serve. If you're actually looking at, let's say, well-established traders, actually you are not doing your job, you are not actually functioning in the line of in conformity with your mission, which is to serve the poorest of the poor. So there is this possibility of mission drift, as we call it. And many of the conventional microfinance institutions, they have faced this criticism or face this stigma of serving the not so poor and the rich and moving away from their original mission. Now, this is actually justified on some grounds. When they charge a high rate of interest, for example, they would justify it on the ground that they also incur very high operating costs. Now, microfinance is not like mainstream finance, where a single bank can really cater to a much big region, and a handful of big ticket financings, be it leasing or be it a loan, corporate loan, can actually take care of your entire loan portfolio. We are looking at a loan portfolio which is where there are thousands and hundreds of thousands of borrowers or loans. And to manage such a portfolio, certainly the operational costs are huge. When you are taking finance to the doorsteps of the smallholder farmer, or to the small trader, or the micro-entrepreneur, of course your costs are going to go up. So high cost of funding, in a way, is seen as a natural outcome of microfinance. But in the context of Islamic microfinance, we have a solution, in fact, which is why Islamic microfinance gained its popularity partly due to this factor, that you have a way to integrate your own charity funds, which, unlike a secular framework, is recurring in nature. Zakat is recurring. Conventional donations are not. You look into any empirical research or empirical data, you will arrive at this conclusion, that conventional donations could be very, very random, and because of which they're best utilized for capacity building. Whereas zakat could be used, or funds flowing from a cash waqf endowment could be used to absorb certain cost elements. For example, the cost of providing skill enhancement. It could be absorbed through such recurring flow of funds. Or certain cost elements could be absorbed on a regular manner, on a recurring manner, because the fund flow itself is recurring. It's not like the conventional domain where donations are random. Okay, so there is a possibility that such funds could absorb part of the costs, and we have the beautiful model of Akhuwat from Pakistan, which started out early, beginning of the millennium, and now it has developed a robust model. Using continuous flow of zakat, they've been able to absorb the costs, the operational cost, and as a result, they have been consistently bringing down not only their operational cost, but also the cost of funding itself starting from 5% to 0. And for many, many years now, they've been offering these services at 0 cost. And then, of course, we have the possibility of using Awqaf for skill enhancement, for providing various business development services. And you have a possibility. Many of these institutions actually look at family as a unit of financing. How much time I have?
10 minutes.
Okay, I'll try to manage within that. Next, we come to the second most important point. That is the challenges facing Islamic microfinance. Some of these I have already touched upon. Most of the challenges that come from, they can be seen in the context of Islamic replications of conventional microfinance. We find in the context of microeconomy, when you try to do a tawarruq, when you try to do a murabaha, many of such mechanisms, they break down. When we are talking about informal relationships, and we're talking about very large number of transactions within a very short span of time. So settlement of each and every transaction and ensuring the sequence of transactions as it happens in case of muraba, as it happens in case of tabarruk, is actually kind of breaks down. Right. So we can no longer use such mechanisms in the context of the Islamic replications of conventional microfinance. And of course, when we are looking at just one single product like by module, for example, or deferred payment contract, we are actually giving less emphasis on project viability. Project viability will be under very sharp focus only perhaps in the context of risk sharing contracts, like musharaka and mudaraba and so on and so forth. For debt-based contracts or leasing-based contracts, there will be naturally less emphasis on project viability. And it is the emphasis on project viability is indeed one of the major strengths of Islamic microfinance, as we understand, because of its reliance on contracts like sharing-based contracts, which are not very popular with conventional microfinance. Then, of course, high cost of finance, we have just discussed this point. Women-only approach, again, we have seen, has got sociological implications. And the most important point is, I would say, that goes with the riba prohibition, though we are not talking about riba, but we are talking about perpetuation of debt. A debt may not perpetuate at that rate. The rate will be much slower because riba is not there, compounding is not there, but then we are again looking at a debt-based system. So we are losing out on the benefits of a sharing-based system. And also, with partnership-based modes, we find that low financial literacy, it often precludes the possibility of using these modes. The micro-entrepreneur needs a certain level of maturity to be able to do a good job of bookkeeping or reporting his profits, and then only he can go for a proper sharing of the profits and revenues. Okay. So I'll quickly review some of the challenges, and then there are just a few more points to be covered. With indigenous Islamic microfinance, of course, it is has the advantages that I have discussed, have the strengths, but there are also certain challenges. Many of our zakat and awqaf sector, they have been using the traditional modes of doing business. So many of them, they lack transparency that go with modern organizations. Often they suffer from poor accountability and governance structures. Many of them are family-based, and they don't have a proper succession planning or a proper governance, and low employee productivity, which results in low operational efficiency and high operational cost. And often these high costs are also sought to be passed on to the clients, which is not fair, of course. Then there is a threat of continued dependence on charity. And that is often pointed out by the charity workers, like zakat workers. They often share this with us, that they find it very, very surprising to see people making very little efforts to come out of their poverty. And when they receive this charity money, it kind of induces them to wait for the next installment. And of course, many of these are very poorly linked with the formal financial system, like banks or capital markets. So we come to the final point that I need to emphasize on. What lies ahead? What is the future of Islamic microfinance? And there are some interesting takeaways here, perhaps. We have been recently, in fact, yesterday, as I was trying to prepare for today's presentation, I Googled for a term called death of microfinance, okay, with a question mark. I got some interesting points that were thrown up. That is not indeed, we are not looking at death of anything. We are actually looking at robust microfinance models. Microfinance might have become less fashionable because we are now using a different narrative, starting from 2000 onwards, perhaps. The term financial inclusion or the narrative has become more popular, coming from United Nations and coming from many of the publications of the World Bank, where very strong empirical relationship was observed between financially excluded communities and poverty. And in fact, we did a study in IDB as well, Islamic Development Bank. For our member countries, we found a very strong relationship. The countries which were at the lowest strata in terms of poverty, you find the financial exclusion was the highest. So financial inclusion became the next narrative to catch the attention of the policymakers. And now we are hearing about impact investment from the investor's point of view, where we have started thinking in terms of the SDGs, the Sustainable Development Goals. Poverty alleviation is one of them. And you would certainly find some degree of difference of views among impact investors. Some of them would see microfinance as a form of impact investment. Some would decline to see microfinance. They see this as a profit-making game without having much of an impact on in the poverty and of the alleviation. But some would definitely include microfinance as a form of impact investment, looking at its impact on the poverty as such. The challenges, of course, this again, future of microfinance has to take into account this aspect of change, that we really just don't need the right modes or the right models. We also need to bring about a lot of changes in the way our societies function, in the way our institutions function, in the mindset of the micro level player, which is either the recipient of zakat, the so-called poor, or the various people or the institutions that are part of the overall infrastructure at all levels. Even at a regulator's level, we find varied practices. Some countries have the Ministry of Religious Affairs taking into account zakat and awqaf and such institutions. Whereas microfinance is within the domain of the Ministry of Finance or the central bank. And you don't see a kind of, when you talk about integration, you face a problem there. You have the Ministry of Cooperatives, again, which looks after the Baitul Mal wa Tamwils. We find there's a big challenge facing the Indonesian Financial Services Authority, which is trying to actually bring in the Baitul Mal Tamwils under its fold with varying degrees of success. It's not quite, we can say it's not been quite successful so far. So these challenges remain at various levels in terms of regulatory frameworks. Right at the top, you have these, the going structures, the inertia of the going structures. You don't want to change. We are tuned to thinking in terms of endowments as something within the Ministry of Awqaf. But endowments could be a way of taking care of humanitarian finance, taking care of development finance. That fact is yet to be realized. That realization has to grow at the level of the policymakers. Similarly, at the micro level as well, we have to see a lot of changes in the mindset of the people to be able to see how they can change themselves. And you can drag a horse to near a pond, but you cannot make it drink. In fact, that is the very strong message that comes out of many Islamic microfinance initiatives, that you can provide the skill enhancement trainings, you'll find few takers. or few interested takers. They will simply tell you that we are not interested in this particular skill. You need to bring in some other kind of skill. So the whole process slows down because of this, to match the kind of skill that will be received well, that will actually lead to changes in the productivity of the individual and make him a micro entrepreneur. And only then perhaps he can benefit from the Islamic or conventional microfinancial services that are provided to him. Okay, this is the last point that I would like to highlight. We are looking at future, so we are looking at digital economies all around. This is something that is unavoidable for future. And we have actually, there are interesting examples in the past as well. Those people had foresight and farsight. They could predict at the time as well when Kiva.org actually got the Best Islamic Microfinance Provider Award, though it didn't claim to be an Islamic provider. Because using technology, it could provide microfinance at zero cost. It could bring operational cost to zero. So it was rightly seen as a trendsetter, and for many of the subsequent Islamic crowd funds, which actually could see that you can do Islamic lending, you can do Islamic investment by linking up using technology, the saving surplus individuals and units with the saving deficit individuals and units in the economy. And thereby, you don't have to incur a huge operational cost, which goes along with the door-to-door service provision. So using technology, you can certainly not only make affordable microfinance, but also you are strengthening the linkage between financial and real economy. You don't have to go for spurious, contractual mechanisms to somehow make it Islamic or somehow provide the package of Islamic to a conventional product. Here, actually using technology, you can ensure a one-to-one link between the financial transaction and the real commodity or the real economy that is served by such finance. But again, it has its usual suspects. When we talk about fintech or when we talk about digital economy, there is a lot of discussion currently going on. This is very similar to the concerns that were part of the SMART campaign. Around 2005 and 7, we find SMART campaign taking off, which basically we're looking at over-indebtedness. Now with a technology-based platform, you certainly have this risk at a much higher level. That when taking a loan is that much easier, and you don't really think twice before going for a loan. And we have seen how credit card revolution actually has led to the consumerism boom, and people borrow at the drop of a hat because it's that much easier. So convenience is at the cost of prudence. So again, you need to perhaps have not only financial literacy, but you need to have programs to teach your clients how to be prudent. When they use such platforms, they must be able to use it to their good advantage. So over-indebtedness is certainly a problem to be tackled. You have these are all, I would say, threats looming on the horizon. Lack of data privacy. You have limited meaningful disclosure to the consumers. And you have the security concerns with digital financial applications. There have been instances of the investors facing huge problems because of dealing with cryptos, crashes, and so the regulator is rightly concerned, and the observers of the microfinance scene are rightly concerned that with digitization, certainly we have great advantages, but we certainly have to keep the I would say the usual suspects firmly in the front burner when in the context of policy formulation, in the context of finding the right solutions. This have to be taken into consideration. Thank you.
Okay, we have one question. Are there tangible KPIs in place for the social impact of Islamic microfinance?
The answer is yes. Some Islamic microfinance initiatives I had a privilege to have interaction with. They have developed tangible KPIs. For example, the Islamic Development Bank, it has a huge portfolio of Islamic microfinance operations. And we have developed a toolkit for Islamic microfinance. And there's a just clear, I would say, a module is clearly devoted to the social impact of Islamic microfinance. Okay, so, but I'm not sure whether this is in public domain, which could be freely downloaded and made use of.
I think the social impact is something not as easily to measure or assess. It might take some time to see, and especially you're looking at changes in the hearts of people also.
True.
Okay, we're going to move on to the second question. What are the suitable models for poverty alleviation?
Well, I think we started out by taking a look at what are how Islamic microfinance works, and there we discussed very briefly, of course, a range of models. Some of these were actually replications of conventional microfinance, and they had their pluses, they had their weaknesses as well. And we also briefly discussed some Islamic indigenous models rooted in zakat, awqaf, and cooperation. And again, these have their very strong advantages. If you ask me to make a choice between the two, I would go for the second kind of institutions. The reason being, some of the evils of the conventional financial system, like they are very firmly rooted in perpetuation of debt. So if you're looking at a debt-laden economy or a debt-based economy, we are actually moving away from a good economy and also an Islamic economy. So to the extent that the conventional models and their Islamic replicators, they use debt-based mechanisms, they are not free from this, I would say, evil of perpetuating debt in the system. Debt is permissible, certainly. So we are not saying that it is something forbidden. It is only riba which is forbidden, because riba perpetuates debt at a much faster rate. But even if we are not talking about riba, but still, compared to a simple debt-based contract, if you're looking at sharing-based contract or risk sharing, a poor, I would say, a poor family is much better off with sharing than being under a kind of indebtedness. This is again a matter of observation which comes out of anecdotal evidence. We don't have robust research evidence to back it. But then what we find in Islamic replications, the Islamic indigenous models, the problems that are currently facing with, it is not difficult to get over these problems. And there are already forces at work to take care of this. For example, when we talk about poor governance, then we also find a lot of effort currently is on to develop the good governance standards and to educate Islamic institutions in how they can become more transparent and how they can govern themselves well. There's a lot of standard setting that is being undertaken in different regions, I would say, in different parts of the globe, which can basically enhance the efficiency of these such institutions and also make them more accountable, make them transparent, and also retain all the advantages that go with integration of charity into for-profit microfinance, because that is a very effective way to not only provide for safety nets. For example, in many countries, humanitarian finance comes before development finance. You have a natural calamity striking a particular community, for example. What comes first is humanitarian finance. Then you need to be able to use zakat and resources from cash, for example, for taking care of the safety nets. then you can think in terms of how to develop themselves, how to economically empower them. So basically, you're looking at composite models, composite kind of structures, different types of modes rooted in philanthropy, rooted in cooperation, rooted in not-for-profit, like Kharde Hasana and Kafala and so on and so forth. So these are this entire range of diverse range of mechanisms are available to you to meet the challenge.
I see a question here, but it sounds the same like the second one. To elaborate more on poverty alleviation as the main aim of Islamic microfinance. That's almost the same. I mean, if you have anything.
Yes. In fact, poverty is not celebrated in Islam. That's something that we agree on, that poverty is seen at best as a test of your patience, as a test of iman, faith. But it is not something that is ideal for a society or for an individual, that one should always try, persevere to get out of poverty. In fact, there are good references in Hadith literature where poverty is seen almost similar to a lack of faith, because the way it is understood is poverty can lead one to faithlessness. So that is something to be abhorred, or all efforts must be made to move out of poverty. If you happen to face adversity or poverty, then you must make efforts to move out of it. That is, again, the considered view of all scholars. And that is why it is poverty alleviation is seen almost, I want to use the word almost, it is seen entirely in line with the maqasid al-Sharia, or the objectives of Sharia. Sharia, it is the goal of Sharia to move humanity out of poverty. So any effort that goes in that direction is a step in the right direction.
Okay. Another question. I think we have time for two more questions. Yeah. Okay. Next question. How can we ensure that it would be sustainable and would not put people in more trouble?
Yeah, in fact, some of most of the Islamic microfinance indigenous experiments, I'm not talking about pure replications of conventional models. They have used composite structures, and they do not look at financing alone as the solution to poverty alleviation. That seems to be a kind of a consensus among Islamic scholars or Islamic economists, who would like to see ways and means or strategies in place to enhance skill level, or to make the client or the poor more productive through education, through skill enhancement, through skill imparting programs, through managerial inputs, hand-holding, guidance. A whole range of non-financial services are seen as an essential component of any poverty alleviation package for intervention. For example, most of the Islamic Development Bank, Islamic microfinance schemes, they have always looked at this multiple ways of making a dent on poverty. Unlike some of the purely microcredit based mechanisms, which basically look at making Islamic loans and a good recovery of that, and maintaining a good portfolio of Islamic loans. If you really want to have a sustainable kind of impact on poverty, or make a sustainable dent on poverty, then you have to economically empower the people that you are targeting. Yes. And in economic empowerment, again, this could have a variety of components. You have to provide the managerial inputs, you have to change their mindsets, you have to enhance their skill level. So basically make them productive agents or productive Muslims. And of course, one cannot understate the importance of, or rather one cannot overemphasize the importance of the Islamic financial system and the financial modes. You must have a formal, well-regulated, transparent Islamic financial market, which Islamic microfinance institutions should be able to link with them so that they can enhance their scale as and when, as they grow, they should be able to meet their capital requirements from the Islamic banks, from the Islamic capital markets. Only then it could be scalable and it could be sustainable.
That's a very good answer, comprehensive. This question about rate, but I think for rate questions is quite differs by region.
Yeah.
If you want to go there, or we can also skip that.
Okay. In fact, this was one of the, as students of economics, we always came across this question. We were initiated into Islamic finance. Now, what is the Islamic, what are Islamic ethics to tell about profiteering or charging very high price? Should there be a price, cap on the prices? Be it a commodity market, be it a financial market, be it any market for that matter. Because as students of economics, we also learn about administered prices. In the government, they try to fix prices in certain commodities, especially the essential commodities like agriculture sector. You have this administered prices mechanism in place, or basic essential commodities. Governments do try to fix prices. Now, we were amused to learn, or we were excited to learn rather, that Islam backs for free prices. In fact, there's a well-known hadith which basically goes like this. The Prophet, peace be upon him, was approached by some people who complained about very high prices. And they requested the Prophet, peace be upon him, to fix prices for them. And the Prophet's reply, as all of us know, was in the negative. I think that's a basic, I would say, idea about Islamic markets. Islamic markets are free markets. And when we say free markets, we are assuming that there are no interventions or artificial interventions, either on the demand side or on the supply side. So if somebody is trying to control prices on the supply side, that is not permissible. If somebody is trying to, create artificial demand, like people, artificially bid up the prices in an auction, that is strongly discouraged. That is something that doesn't have a place in the Islamic market. So basically, once the demand and supply forces are free, then the price that formation that takes place in such a free market is the ideal price. But the later fuqaha, when they found the Islamic jurists in specific markets, when they found that there were anomalies, people actually trying to artificially jack up the demand or curtail supply by withholding the stocks, creating artificial supply, then they permitted as an exception that the market regulator can fix the prices if it finds the anomalies are difficult to curb. So only when you have an anomalies present rampant in the economy or in the system, then you can fix prices. The same goes with returns. Like when we find high cost of microfinance has always been frowned upon, has always been complained about, that this is not something good for the client because he finds it unaffordable. The poorest, especially when we talk about the poorest of the poor, the fact of the matter is, so should we fix the cost of microfinance? The answer would be a simple no. That fixation is perhaps permissible only if you find a strong evidence of anomalies present in the market. But if it's a free market, then of course, you can always find other ways. Islam does provide you with other solutions to bring down the prices, and Waqf is the best example, how you can bring market prices down to the affordability level. We all know about the first Waqf that was created, the history of Islam. Its direct outcome was to bring down the price of water and make it free for the people of Medina. Because the owner of this well Ruma, he used to charge exorbitant price. And when the Prophet ﷺ, he intervened, he called upon the people, appealed to the companions, that who is going to help the people of the Medina. Hazrat Usman, Radiyallahu Ta'ala anhu, he came forward, he negotiated with the owner of the well, and we know the story, that half of the rights were purchased by him for a price, and which was made free for all. On those alternate days, this price of water was made free. So the owner of the well was actually forced to free the other half, at a throwaway price. So basically, this was a bright example, I would say, an excellent example, that if we look around and see that healthcare is now being offered at a very exorbitant price, unaffordable to the poor. We find insurance being charged and the premiums are going sky high. We find education, the cost of education is beyond the means of an average student. What is the solution? The solution is provided by Islam. You create waqf with the explicit objective, which will be mentioned in the waqf deed, which becomes like a law for the management of the waqf or the endowment, that the benefits of this waqf will go for providing certain benefits, and that they could be structured in such a way that they could make the prices look rational or bring them down to the rational levels. So that is a way to bring down prices, not by fixing them.
Okay, I think this should be it for any further questions that anyone would have afterwards. You can feel free to always email us at Ethis Crowd. You can follow Professor Dr. Ubadullah. And thank you so much again for coming here to Ethis. It was very informative and educational session. And yep, I believe that's it.